All right, hey y'all, Sam here with eXp Realty. I wanted to stop by and kind of talk about like what the heck is going on with the real estate market right now. So here in Onslow County, we've seen market appreciation year over year for the past couple of years go around 8%. What we've seen with the mortgage interest rates in the upper 7%, low 8% range, some of that's the highest it's been in the last like 30 years or so. Previously, we were in a seller's market, and we're still in a seller's market right now. So houses are on the market here in Onslow County for approximately 15 or so days before they go under contract. But you're seeing some that are a little bit longer now, and we're not seeing a lot of multiple offer scenarios. There's still a lot of demand though. There's still a lot of people that need housing. There's people moving in and out of the area. It's a big military town, so people are getting orders here and need a place to live. And so then there's housing developments going up. There's not enough housing, there's not enough inventory on the market to meet the demand. However, with the mortgage interest rates, a lot of people are getting priced out of what they want to be able to get into. So what we're seeing is a slight decrease in the amount of buyers that are out there. People are getting priced out. That doesn't mean that it's going completely into a buyer's market. We don't know what the future is going to bring. We don't know if interest rates are going to rise. We don't know if they're going to fall. And, we just don't know. But what we do know is that there's a lot of demand and there's a lot less inventory. So it's still a seller's market, but I think right now what we're seeing is a lot of sellers, looking on the MLS, a lot of sellers are offering money towards buyers' closing costs or towards whatever they want to use it for. So we're seeing a lot of sellers putting a lot more incentives out there for their buyers. So that indicates that the buyers are going to have a little bit more negotiating power. So I say all this because if you're debating whether you want to buy or rent, yeah, sure, you can rent. If you're a military member, you're going to get basic allowance for housing, but you're putting that towards someone else's mortgage. I made a video about this before, but you're letting it go to waste and paying off someone else's mortgage and letting them get the principal pay down and equity into the house. Whereas, yeah, you might have an 8% or more interest rate, depending on your situation, but you're putting it towards your principal. You're putting it towards your equity. And who knows, maybe later on down the road, if the interest rates do go down, which I don't know if they will, but if they do go down, you could refinance for what's left over on the house. Yes, you will have to pay extra closing costs again when you do a refinance, but to pay a couple $1,000s or a few $1,000s it is to do the closing for a refinance, but you're saving percentage points off of your mortgage. Over the long run, you're actually saving more money by paying less. So just think about that in today's market. Don't let the interest rates scare you away. Get out there, still buy real estate, and it's a long-term game, and see what the future holds.